Today, we're going to delve deep into the recent financial movements of the market's big titans. Jeff Bezos, the visionary founder of Amazon, made a decision that resonated throughout the business world by selling an impressive $4 billion worth of company stocks. Meanwhile, Jamie Dimon, the respected CEO of JP Morgan, didn't lag behind, disposing of over $150 million in stocks of the financial institution. The intriguing detail is that Dimon hadn't taken such a significant step since 2006. And to complete the picture, we have Mark Zuckerberg, the iconic leader of Meta, formerly known as Facebook, who surprised everyone by selling over $500 million in stocks for the first time in a decade. And the most curious part? The US financial market is at historic highs. This leads us to two intriguing possibilities. Either these magnates need a considerable amount of money to acquire private islands and further increase their fortunes, or they have a premonition about the future of the American market. Do they know something we don't? Is a crisis lurking about to reveal itself? That's what we'll try to unravel in this investigative video. But before we proceed, don't forget to leave your like and subscribe to the channel. Your participation is essential for this content to reach more people and contribute to an informed debate. Before we delve into the charts and analyses, it's crucial to understand the concept of insider. An insider is someone who has privileged access to internal information of a company or a specific market, which often gives them an advantage over ordinary investors. For example, if I'm the CEO of a publicly traded company, I'm privy to all the day-to-day happenings of the company, making me an insider. Any transaction involving stocks of this company must be publicly disclosed, as I possess information that the general public doesn't. It's in this context that platforms like Quiver Quantitative emerge, gathering and analyzing this privileged information. Let's take a look at one of the charts available on the platform. This chart shows the total buying and selling of Meta stocks by Mark Zuckerberg since July 2022. We notice a worrying trend. Since then, sales have outweighed purchases disproportionately, and Zuckerberg isn't alone in this selling trend. Jeff Bezos also caught attention by disposing of thousands of stocks in February, in such a significant amount that renders the movements of previous years practically insignificant in comparison. It's worth noting that the sale of stocks by JP Morgan CEO Jamie Dimon is a rare event, occurring for the first time since 2006. And it's not just the CEOs who are selling. Other top executives like COs, CTOs, and CMOs are also following the same trend. This leads us to an intriguing reflection. Why are these individuals, with privileged access and vast fortunes, choosing to sell their stakes? If they're buying, we can interpret optimism about the company or the market. But if they're selling, perhaps they're acting with pessimism, indicating concerns about the company or the market. Or perhaps simply they need liquidity for legitimate reasons, such as acquiring a private island for billions of dollars. In the last 12 months, CEOs of major American companies have significantly increased their stock sales. Does this indicate that a crisis is imminent? Let's analyze some indicators to better understand the situation. Starting with the Fear and Greed Index, an indicator that shows us whether investors are acting with greed or fear. When there's greed, asset prices may be inflated as investors aren't rationally evaluating fundamentals. On the other hand, fear can lead investors to sell indiscriminately without considering fundamentals. Another relevant indicator is the inversion of the yield curve. Imagine you have the option to receive $1,000 in 10 years or $1,000 in 2 years. Naturally, you'd prefer to receive $1,000 in 2 years because you'd receive more money sooner. However, in certain economic moments, there's an inversion of this logic. Short-term yields become higher than long-term yields, indicating that the market is pricing in a possible recession in the near future. This phenomenon has preceded all major economic crises. Furthermore, the Federal Reserve Fed, the central bank of the United States, hasn't yet begun a cycle of interest rate cuts, despite pressures. As long as inflation in the United States remains high, the Fed may hesitate to reduce interest rates. This is concerning because interest rates act like a rubber band supporting asset prices. If the Fed doesn't intervene, the market may begin to price in a reduction in asset prices. We can't overlook the geopolitical situation, with events in Russia adding additional uncertainties to global financial markets. In summary, while some indicators point to a strong and growing economy, others signal concerns and weaknesses. The recent stock sales by top business leaders add an element of intrigue to this equation. Are we on the brink of a crisis? The answer may lie in the hidden details behind the financial movements of these market giants. Beyond economic indicators, it's essential to analyze the current geopolitical context. Recent events in Russia have caused turbulence in global financial markets, adding an additional layer of uncertainty and volatility. The escalation of geopolitical tensions, especially in strategic regions like Eastern Europe, could have significant ramifications for global economic stability. The unpredictability of these geopolitical events can directly impact investor decisions and market behavior. Considering all these elements, it's inevitable to question whether we're facing an imminent storm in global financial markets. The financial movements of business leaders, economic indicators, and geopolitical uncertainties form a complex puzzle whose pieces are intricately interconnected. The true nature of these actions and indicators can reveal much about the underlying expectations and concerns of market agents. In light of this panorama, it's crucial to stay informed and attentive to changes and trends in financial markets. Careful analysis of these events and indicators can provide valuable insights for investors, entrepreneurs, and market observers, enabling a more informed and grounded decision-making process. To conclude, it is important to remember that the financial market is dynamic and complex, subject to a variety of influences and unpredictable events. While analysis and indicators can provide valuable insights, it is essential to maintain a cautious and adaptable approach when investing and making financial decisions. Follow us for more updates and analysis in our upcoming videos. And always remember to do your own research and seek professional guidance when making important financial decisions. Thanks for watching and see you next time.